Hey everybody, John and James here from Everyday Crypto, sponsored by Crypto Tax. I'm sorry, CryptoTaxShield.com. Thanks, James, for sitting down with me today.
Yeah, my pleasure.
Yeah, so I just want to take a few minutes and pick your brain a little bit today.
All right, and let's remember, you got to smash that. What is it? That like button, that love button. Just go ahead and pound it. Yeah, there you go.
Right.
Cool.
So James, throughout this series, we've been talking about a lot of different great NFT projects and crypto projects and all this other good stuff. But one thing that I want to get for everybody watching in the membership and outside the membership is let's talk about the top three things people need to know before they ever start even touching their crypto taxes.
Oh, yeah, great question. So without getting into the top three things you need to know about getting into crypto, this is just really from the tax side of it, because right. I think this is where there's the biggest disconnect and misunderstanding. I would say that, and not in necessarily this particular order, but you really have to have a good platform of tracking your crypto activities from a tax perspective, right?
Right.
You've got different methods of accounting that you're going to be looking at using. One of them that's very powerful is the highest in, first out method. And if you're not able to track all of your activity, you're going to have a tax return that's probably going to be incorrect for a lot of reasons. It could understate income. It could overstate income. It could miscalculate gain losses, could use the wrong method of how you're treating your gains.
Right.
So having a good platform that allows you to track the activity. And remember, all of those platforms don't have access to your crypto account or your wallets.
Right.
They just track the activity and making sure that, that's all tight. I think the second thing that I would say is probably as critical, if not more critical, is to make sure that you have a very good way of keeping records, right, of your transactions.
Mm-hmm.
I have some people that, they just have a little bit of challenge with how technology kind of rolls out a little bit. I suffer from some of that myself. And so even taking a screenshot of a transaction, I moved money from my bank into my Coinbase account, and I bought some Ethereum, and then I got a receipt. Every step along the way, if you're keeping some sort of record of those transactions, you don't know if the platform's going to fail, you're going to lose your information. Right. Just a host of things that could happen. Mm-hmm. And I think this third thing, and I see this an awful lot right now, just the confusion of misinformation, if you will, right?
Right.
If you receive an NFT, an airdrop, if you're doing, like, for example, Gala, right? And you've got one of the founders nodes, and you're getting, let's say you got like we have 3 nodes, right? 3 founders nodes. So we're getting, like today, about 1,050 Gala tokens, right? Credited to the treasure chest. The minute that you get a credit to an account that you have control over, you have an income recognition event, period.
Yes.
That's income on that day. You can go on to Gala's Discord. You can go on to Act. You can go on to all these different platforms. You can go on to YouTube, and you're going to have people say that, oh, no, it's not income until you move it to the blockchain, blah, blah, blah. All right. So you have another event. It's a recognition event. If you get it in your account as a reward in token or an NFT, and then let's say a week later, you move it to the blockchain. Well, now you have another recognition event, and that's a capital gain recognition event. It came in on day one at 50 cents a token value. Mm-hmm. So you had 50 cents of income if you got one token. Then on day 10, you moved it over to the blockchain, and it is now 40 cents, right? Mm. So now you have a capital loss of 10 cents for every token that you moved. Or if it was $1, you have a 50-cent capital gain for every token that you moved, because capital gain is when you've moved it from your income and now you've done something with it. That's a recognition event that you have to keep track of.
Right.
And so I think where a lot of people are going to get sideways on this is understanding every type of crypto that you're doing. And if you're getting airdrops and rewards and incentives and prizes, all of those things, the day you receive them, are income recognition events.
Right.
Then when you start moving them, you likely are creating capital gain, capital loss recognition events.
Gotcha.
And so those would be the three things that I would say are probably the most important things getting involved in crypto, or if you're already involved, you should probably pay some attention to that.
Yeah, no, and you bring up two things really that sort of pop in my head is one thing is to educate yourself enough to where when you're out there in cyberspace and getting advice from every person who knows somebody who knows somebody,
right.
To have some sort of base level of knowledge so that you know who to listen to, right? And that's sort of what we've built Crypto Tax Shield around, is making sure we have accurate, up to date information by people that do this every day, people like yourself that do this every day.
Right.
And second of all, I think it is important. Just if you're going, it's nice to make money, and everybody wants to do it, and they can do it now playing games and NFTs and all that stuff. Just take that a little extra time and make sure you keep proper documentation,
right?
Because it makes people like your job so much easier. Somebody like myself who's doing it, it keeps it easy on me to not have to go through and like at the very last minute try to piece all this stuff together. So if you just make that little bit of effort every day to make sure you keep good records, and there's plenty of apps and stuff, and we can get into that in another episode, but there's a lot of cool places where you can store that info.
Oh yeah, there's a lot of stuff out there. You make a good point, and I think that, look, at the end of the day, if you're not doing it, you're going to have to pay somebody to do it for you.
That's
because if you ever have the problem on your tax return, how can you ever have confidence that you're going to file an accurate return? And what's going to happen, I think, more than not, is people are going to make the mistake of over-reporting because they don't know all of these other intrinsic little rules. And the cool thing about Crypto Tax Shield is that we've reached out and assembled, other enrolled agents, other accountants, CPAs, tax attorneys, experts in their fields, crypto whales, crypto investors, crypto people that are building massive crypto mining operations, and people that are in crypto projects.
Yes.
Because we have to have all these different perspectives of what things are happening, what's being developed. And then how do you filter that through somebody that's jumping in like you into crypto because you're going to go talk to your tax professional and they're not going to have a clue what you're talking about. Well, I got 3 airdrops, I got 2 NFTs and a partridge in a pear tree, right? And they're not going to have any clue how to put that on your tax return.
That's right. No, and look, it's coming. That day is coming where everybody is going to be shocked by how much oversight is done by the IRS when it comes to all this stuff. So, James.
Well, right now I can just add a note on that.
Yeah.
We just saw one of the recent audit notices related to crypto, and they're doing, in a lot of these cases, if you're a bigger player, they're doing a field examination. That means they're gonna want to come to your house.
Oh, wonderful.
And think about it. The reason they're going to come to your house is because if you're making a lot of money in crypto and you got that nice Lambo parked out front, right? And you got the 2 SUVs in the backyard, right? And you got just all the bling and all the gold and all the goodies and blah, blah, blah. They're going to be making an assessment of your lifestyle. That's why they want to do the field exam.
Right.
And so, I'm just going to tell you, the next 3 to 5 years is going to be very interesting to see how much the IRS actually does know, and all these notices going out.
Right.
We're already starting to see some of that right now.
That's weird. Yeah. Well, this is awesome, James. Yeah, this is everybody who's watching this. Please take that into consideration. Head on over to CryptoTaxShield.com, sponsor of this video series. That's where you'll get some good education and access to people like James and a lot of others just like him.
And hit that like button.
Hit it. Join us.
Yeah, hit
the subscribe. Get the notifications. make sure you comment. We love to see.
Yeah, we love the comments.
Yeah, love the comments and send questions there too. We'll cover whatever people want to know about. We'll cover that in future episodes. So
awesome,
James. Thanks so much for your time, man.
All right, John. Take care.
Take care.
All right. Cheers. All right. Bye.